Um, can you hear me? Can you hear me?
Yes, I can hear you clearly.
All right. Thank you. Okay. Um, Let me just mute. Okay. If you have any question, I would like you to send that question to the chat box so that I can actually see them because I've muted everybody and nobody can actually mute himself. So if you have question, just raise up your hand or just send the question to the chat box, or you can tell me that you have a question, then I will look for you and unmute you so that I can actually ask your question. All right. Today I will be talking about uh, I'll be talking about again. Can you hear me? Can you hear me? Can you guys hear any sound? Right? Can you guys hear any sound? You can just type yes in the chat box. All right. And am I very loud and clear? Um, okay. All right. All right. Thank you. Today I will be talking about how you can use other blocks. All right. What other blocks? This is actually the combination of BTMM and ICT. That this is actually the real combination. When you say you're actually combining BTMM, this is not actually how I trade. I don't trade this way, but I this is actually what I was trading before I developed my own concept, right? So, and it's actually profitable. I can tell you if you can follow it majorly on Euro pairs and GBP pairs, um, you can always smile and actually be happy at the end of the week. So I'll be discussing how you can actually use other block and how you can trade and the entry. I'll actually be discussing the entry also with you there, so that you can as well practice this and learn this and actually earn money for yourself then and be happy. All right. Many of you actually know the meaning of other blocks uh, um, because I've actually done the recordings on that. I've done recordings on market structure. I've done on institutional order flow. Then I've done uh, on other blogs, how you can actually identify other blogs and the likes. Then I've done teaching on how to identify peak, how to trade peak, how to trade safety trade, right? How to trade reset and all those BTMM terms that are actually very, very important, like three levels of rise, three levels of drop. All right, as you can see, this is actually a plain chart, except you seeing the yesterday's high, yesterday's low indicator on this chart. So I can as well remove this indicator. Right, let me just remove it. So this is just to show you that you don't actually need indicator just to trade BTMM in the style I actually want to show to you. Right. So many of you already know, the reason why I don't trade, um, I don't really, excuse me, I don't really fancy BTMM is because of a whole lot of indicators that is used and the EMAs and all the likes. You can actually trade a plain chart and you will be fine with that. And also the levels, the way other people will actually explain the levels are actually different from how another person would explain it. So levels are always subjective, right? They are subjective is actually depending on the kind of person that is actually doing um, that is trading that and that have actually studied that on or all by himself, right? So they are always subjective, right? But the way and actually the perfect way, there are actually different ways of uh, of of calculating peak I mean sorry levels of counting levels, different ways of counting levels. And I'm actually going to talk about the first one. Let me just list them. The first one is actually the use of EMAs, right? You use EMAs to count levels, right? Use of EMAs. And the use of EMAs involve in these actually levels according to BTMM is always you can always count your levels on 1 hour time frame, right? You can always count your levels on 1 hour time frame. This is actually not fixed because our price is actually fragile. So that doesn't mean that you cannot count levels on 1 minute time frame or M5 or monthly or weekly. But the one that because BTM is more of a day trading, so that is reason, more of the reason why he always used 1 hour time frame. But you can use it for, you can use daily. You just determine the kind of trader that you want to be. So what I want to discuss now is actually applicable to all time frame as the case may be, based on what kind of trader you want to be, right? If because of your day 9 to 5 job, you might not be able to look into 1 hour time frame and uh, getting your entry from M15, but you can actually trade daily and actually get your entry from H1, right? So these are the variances we actually have in the counting levels based on time frames. Okay, just like what I said you can actually count levels using EMAs, and this involve on 1 hour time frame or any time frame. Let me just use 1 hour time frame. When um the 13 and the 50 cross, right? When 13 and the 50 cross, that is actually when um we have level one, right? This is actually calculated as level one, right? Level one on H1 time frame, right? That's 13 and 50 when the course is actually counted as H1 level one. Then when 50 and the 200 cross, 50 and the 200 cross, so we can count this as level two. Then when uh, the 200 and the 800 cross, or the 50 and the 800 cross, right? It can be either 50 and the 800, or and the 800. When this actually cross 50 and the 800, right? Let me use 200 and the 200 or the 800 cross, we can be looking at level three, right? So you can use EMAs to calculate your levels, right? So this is actually EMAs. That is actually the first part. So another way you can count levels is actually the use of the Asian boxes, right? When you're actually using the Asian box, so this is actually another way you can count your levels, right? This is another way you can count your levels. And another way you can actually count your levels is the use of consolidation, right? The consolidation phase or the accumulation phase of the market. You can use that to actually count levels, right? The consolidation phase, I mean, when the market is actually taking contracts, right? Contraction phase of the market. That is another way. The contraction phase or accumulation phase or consolidation phase is actually the same thing. But today, I'm not going to use EMAs because you can't find any EMAs on my chat box. I mean, on my chart. I'm not going to use the Asian box. I will just use the consolidation because this with the consolidation phase, you can easily relate this with all time frame, right? You can easily relate this with all time frame. Even though there might actually be some other one, uh, you can just look at um you can just look at my video on that. I actually explain, I cited different examples in how to use different forms of techniques in counting levels. But the one I actually found very, very good and based on price action is the contraction phase or consolidation phase or the accumulation phase. Right. So the market works basically in this manner. Right. This is actually how the market works. This is actually how the market works. When we have something like this, right? Then we have level one, which is actually like a consolidation, right? This is level one. Then we have a stop point low. Then the market rise up again, right? Then the market consolidate again, probably something like this, right? It's just like the market structure whereby this is actually a low, this higher high, this higher low, this under higher high, this under higher low. So then we can have another one like this. So this is counted as one, right? This particular impulsive move, right, is counted as one. Another impulsive move is counted as two, right? Another impulsive move is counted as three. So this is level one, this is level two, and this is level three. So the consolidation here is actually what we use to verify. the impulsive move, because after every consolidation there is an impulsive move. So this impulsive move is level one, this consolidation, the another impulsive move, level two, another consolidation. So between level one and level three, we have two major contraction phase of the market. So these are the phase whereby the market will take contract. They will stop on those people that are actually buying for it to continue to go higher. It will stop on again for it to continue to go higher. So in this particular phase of level three, we can see another phase of a stop on, then drop. So this is actually when the market creates something like this, right? Then drop. So at this particular instance, this is when you'll be looking to buy the market, right? So trading the peak will mean that when the market forms something like this, I hope you are all following. When the market forms something like this at the level three, right, you can as well look for entry here, right? You can as well look for entry here, but the best, according to Steve Marrow, is actually for you to trade at the safety uh, trade, which is actually when the 13 and the 50 EMA crossed on the 1 hour time frame after this has actually happened. So you'll be looking at, after the cross, you'll be looking at another stop point, which is actually level one, right? Then drop, right? So you can find another entry at level two and drop. So this will now be called level one, level two, and level three. So we have three levels of rise, right? And we also have three levels of drop, right? So with this, when you actually identify these, I'm actually going to teach you the entry and how you can actually trade this alongside with other blocks, right? How you can actually trade this alongside with other blocks and trading it in a live chart. When you actually have something like this, then you can as well be rest assured. You are just looking for this pattern. Then with your entry, then you are better off, right? So you just choose your time frame, and according to your time frame, probably, for example, let me just quickly say this: when you are using, I'm still going to go back to the charts, still drawing it yet. When you are using H1, right? When you're using H1, so the other block you're actually going to use, right? I would suggest daily order block, right? Daily OB, right? So I'm still going to link everything together. If you're using H4, you should be using your weekly order block, right? Weekly order block as a resistance or as a support to take the level three, which is actually the peak trading. And if you're using daily, right, I would suggest you use the monthly, right? Monthly order block, right? Monthly order block, right? There are some other lower time frame that you can actually use. All right, for example, probably if you actually want to trade M30, right? Just two other blocks away from that M30, you can look at H4, right? M30, this M30 simply means you counting your levels on M30. This daily simply means you counting your levels on on daily. Then H4 simply means you counting your levels on H4. Then 1 hour time frame simply means you counting your levels on the 1 hour time frame, right? So you'll be using 4 hour OB, right? For M15, I will just stop at M15. For M15, you will be using 1 hour, right? 1 hour time frame OP, right? For a support or a resistance. You know, in my teaching on institutional order flow and how to identify order blocks, I already taught um, on the fact that order blocks actually serve as a support and resistance. They serve as support and they also serve as resistance. So you will do well to know that what I'm talking about is after you have actually identified this, for example, on M15, after you have actually identified this pattern, right? This is actually a pattern. After you have actually identified this pattern, which is actually three levels of rise. So you just look on M15, you just look for 1 hour OB, right? 1 hour time frame OB that this level three will find the resistance at, right? Okay, for example, right, let me just use this as an example. Just pay attention here. This is another block, right? So in this particular instance, the market should trade into this. This is actually your other block, right? So if I'm using this as a resistance now, so this is actually a general illustration to describe everything. For example, if I find this level, right, these three levels of rise on 1 hour time frame, right, on a 1 hour time frame, this I should look for daily OB, all right, bearish OB that will serve as a resistance, right, to this, right. So if I found 8-4 pattern like this, like three levels of rise on 8-4, I should look for weekly OP to serve as resistance for me to take the reversal to sell this pair down. Then if I have daily, I'll be looking at monthly OB to serve as resistance to sell this pair down. If I have it on M15, if I have this pattern on M15, I'll be looking at 8-4 OB, right, to sell it down. And if I have it on M15 OB, I mean M15, if I have this pattern on M15, I'll be looking at 1 hour order block. That's actually bearish order block for me to sell it down. Okay, okay. This is also applicable to the buy zone, right? This is also applicable to the buy zone. I hope that is clear. So when you see this kind of pattern, you can do well to look for what I've actually described for you. So with this, you don't need all those indicators really, because indicators sometimes will actually block your views of things, right? You can just use consolidation, then you actually follow three levels of rise, three levels of low, even though it's actually very subjective, just like what I said, because sometimes, just like what happened for the last 2 weeks now, the market did not even give us, the market makes more than 7 levels of drop or whatsoever that actually happen on them. So you cannot really trust those three levels of rise, because sometimes you can have four, sometimes you can have five, sometimes you can actually have more than that. But the first one that is actually more common is the three levels of rise. And I do say something, even though all these three would not actually play out, if you can actually decide that okay, this is the method I actually want to trade, right? Even though it is 50% win rate, do you know that if you have probably a good risk reward ratio, let's say 1 to 5, that is actually going to be produced here. Now calculate that, and you're not risking more than 1% of your account. You identify three levels of rise, probably on based on this time frame that I've actually said. Then the percentage, I mean, the win rate of this strategy. I don't. You actually go and find out. I know it's actually more than 50%. You find out that okay, let's say it's actually 50%. Let's say it's 50%, and you're going for 1 to 5 risk reward ratio. 1 to 5 risk reward ratio. Now, out of 50%, out if you actually trade 10 trades probably in a week or in a month, that shows 5 will go according to your prediction, then 5 will actually go against you. In that 5% that actually go against you, you are only losing 5%. Then in those 5 that actually win, right, that actually win, no, no, I mean, that actually worked out according to your prediction, that shows you'll be having 5 times 5, which is 25. So your net profit at the end of the day will be 20%, right? You can see this is 20%. So this is actually a mindset for you not to trade without calculating your risk. You have to enter a trade with a calculated risk, and you have to know what you're actually dealing with. With 1 to 5 risk reward ratio, you will do well in this market, right? It is impossible for you not to grow your account with this. Right. So just pay attention here. So with this that we've actually described, we can now look into the chart and actually find a better illustration on this. Right. All right. Okay. Let me just check the question I have here. Guys, you actually love question that I've actually answered. If you want to ask question, first of all, check my channel. If you cannot see such a video there, and there is no video on BTMM or a simple ICT term that I have not explained. Right? I've actually explained almost everything. Just get yourself, just do well. Search my Telegram channel. Then you will actually see those videos there. You will see those videos there. Even with those recordings, I know of some people that it's just my free trainings that they're actually trading now, and they are doing well. So you don't have any excuse. You cannot just be on my group and you're not doing okay, right? So just go and study the free materials. They are there for you, and uh, you will do. I've not even explained enter or M15. Why guys answering question like this? All right, let's just go to the chart. If you ask an irrelevant question, I'm not going to answer. Ask question based on what I'm discussing here. Right. So the first thing we're doing we will just be identifying three levels of rise, three levels of drop, right? That's actually the first thing we'll be doing, right? So let me just go back to as far as I can go. No, no. Right. Let's check this. Let's check this. Right. Do we have three levels of rise and drop here? Now, the first one that we have here, right? Um, let me see if you actually take this side out. Because now, when you're actually counting levels, your level two must not take level one I out. Right. That's actually based on the consolidation. Your level two should not take it out. So based on this that we have here, we can actually consider this as level one, right? And this consolidation that we have here, we can consider it as level two, but we already took this one out. So we have to look for another instance. But look at this one here. We can count this as okay. This also take out this low. It's naturally not best for you to take out that low. It will not be. Let's look for a perfect example. Okay, look at what I actually talked about the other time. Can you see that this pair was just dropping, was dropping, but we can as well count the levels here. So this is actually the first consolidation here, right? So we can count this as level one, and this was the drop, which is actually, I mean, this one is level one, right? We have consolidation, so this particular place is level two. From year to year is level two. From year to year is level one, right? To this place this point to this point is level one. We have consolidation. Then from year to year is level two. We have consolidation. Then, right, this is actually consolidation of level two. Then we have from year to year, which is actually, I mean, from this place, this particular area, the stop point high, right, to this particular low, we can actually consider this as level three. Look at this area, but on level three, you should know that there is extra drop, right? So you will not just take your trade immediately when you actually get to level three. You have to look for extra confirmations before you actually enter. So we have level one, we have level two, then this particular area is actually level three, right? Level three, and in level three, we have extra stop points. Can you see something like a head and shoulder in this place? So these are nameable pattern that you can actually see in level three before you take your trade. Is that head and shoulder, right? So that head and shoulder or M's and W's, right? M's and W's. So these are the things that you will see in the pattern. So we can actually see three levels of drop, right? So this is actually how to identify the pattern. Let me just mark them out. Right. So between this area and this area is level one, right? Between this area, right, this place and this place is level two, right? So these are the consolidation phase. Just like what I said, we have two consolidation phase in between three levels of rise or three levels of drop, right? So as you can see that, so this is level three. After getting to your level three, this is your level three, then we can count three levels of rise again, right? So the first, this level one, this is actually the consolidation phase of level one, right? And this is level two, right? And this is level three. After level three, you can see what happened here, right? This market continued to drop. So we have another three levels of rise and drop. We have level one, the consolidation phase, right? This is level one. From this place to this area is level one. From this place to this area is level two, right? Just like what I said, I don't trade this again. Why? Because it's actually subjective. I just base my analysis um, uh, on market structure and institutional underflow. In this level three, then you can see that the market went up again. So we can count another three levels of rise and drop. Right. This is level one. Right. We can see this consolidation phase. Just look at when the market actually reverses again. So it's just like a swing high, swing low, just like what how I described it the other time. Right. Look at this. Can you see? Can you see this? Just like this is actually a high, right? This is a low. This is another high, right? So you can actually count it like that. Then it's actually another high. From this, you look for breaking market structure, right? Breaking market structure for you to now continue to trade down, right? So when you get that in level three, you look for break in market structure also for you to continue to go up. I hope I'm communicating right. So this is actually another I just like level one, this is like level two, this level three. So at the level three, the market was actually about to go up, then just like a reset. This forms like a reset here. Then what happened again? The market continued to drop. You can see that in this particular area, how do you want to count levels here? That's why I said they're actually subjective, because we have so many things that actually happened in this area, right? So let's count levels here again. We have level one, right? We have level two, consolidation. Then we have level three. Then the market drop. In the market dropping, we have level one, consolidation, right? We have level two, consolidation. Then we have level three. In level three, we have this kind of pattern, right? Can you see that? Level three. So for a wise trader, after level three, what you're just looking for is when there is a break in the market structure, and probably when there is a retest, that is when you'll be looking to enter, then you will actually go up again. Can you see that? So counting levels without any indicators, this is actually what we guide you. Just like what I said, many people will have their own ways of counting it. That's more of the reason why I said it's very subjective. Right, let's go on. Right, we have level one. Can you see after the rise, we have level one. Right, so this is actually the best kind of trade you can take here after market has actually created level three, and you're not trading the peak. You know, some people will actually cash the trade here. Right, so I'm actually going to show you the other blocks where I still counting levels now. We have the first levels of rise, consolidation, second levels of rise, consolidation, the third levels of rise. So in the third levels of rise, we have another pattern here. Took out this eye, then the market did something like this. So this is actually the first levels of consolidation, right? This is actually like a reset. We take this as a reset, then we count another one. Level one, consolidation, level two, consolidation, level three. Can you see that? Right. So we count again, right? So this is actually the first one, right? This is actually the second one, and this is the third one. So level one, consolidation, level two, right, consolidation, and level three. All right. All right. So these are the way to count levels, and this is actually the way you count levels, as you can see, and how I've actually described everything on how to count levels. So when you actually understand this, you can apply what I said here, right? What I said here, you can count it on M15, you can count it on M30, you can count it on daily, you can count it on H4, you can count it on H1, right? Can you go to weekly? Yes, you can actually count it on weekly, you can count it on monthly, right? So these are the ways to count levels. So I talk about how to now take this trade, right? How do you take this trade based on um, other blocks? Now you should know that the higher the time frame, the stronger the other block, right? The stronger the other block. Not that the other block cannot fail, but when you're trading lower time frame and you're actually using higher time frame other blocks, you should know that even before it will come back to fail, market will first of all bounce on it. Not all the time. Note that word, not all the time, but most of the time, market will first of all bounce on the other block before it will. That's on lower time frame, and with that, you would have actually catch a little pips that will have actually covered for your expenses or for your target or whatever things you're actually doing with that. All right, let's go on with this. Let me just start from somewhere. All right, we can actually see. Let me start from here. Three levels of rise and three levels of drop. Please, can you help with indicator for daily high and low? Check my channel. Stop all this kind of question. Just check the channel. Everything you actually need is actually there. Right. Let's move on. Let's check something like this. Where should we start from? Let me start from here. Like three levels of drop. This was in April. Before you take this trade here, at the level, this is actually 2019. That's April 25. So this is actually H1. Then H1 will be looking at what time frame? We'll be looking at daily, right? Daily. We'll be looking at daily time frame just to get the reversal zone from there, right? Let's look for daily order block, right, on this pair, and let's see how this pair actually reacted to it. That's April 25. This is the bullish order block here. Can you see this bullish order block? This is a bullish order block, right? And when you've already marked bullish order block, can you see this bullish order block? Okay, let's now go back to that three levels of rise and three levels of drop. Now, 1 hour time frame. Now we count your level one, you count your level two, you count your level three. You can see that many people will actually be deceived in this particular area. They want to take their trade immediately from this area, trading the peak, right? Trading the peak. But do you know what would have actually happened to them? They would have actually ate their stop loss here. But you that actually have the knowledge of other blocks, right? When you have the knowledge of other blocks, you know that you're actually looking for daily bullish order block to get a reversal zone from this block, right? You already get that. Now, when you mark this zone, you can see your market dropping at this phase. So this is when you now be looking at trading peak. Can you see the difference? So this is when you'll be looking at trading the peak because you've already counted three levels of drop, right? You've already counted three levels of drop. You counted level one, consolidation level two, consolidation level three. So at this level three, many people will be deceived, but not you. Why? Because you know it is not at the zone at which you are going to buy yet. Are you following? So it is not at the zone that you are going to buy it. So you wait until the market now get to your zone. So at getting to your zone, you will just switch to M15 to actually get the entry. And don't forget, in BTMM, you also make use of the daily high and low indicator. That shows if the market is not at daily high and low, you are not ready to buy. That shows you are looking for nameable pattern for you to take the trade at yesterday's high or yesterday's low. So what pattern are you looking out for? This kind of W, right? Or this type, right? So this is actually what you are looking out for, the first leg of the W. So after the second leg, at the second leg, you are waiting for your candle to close. I'm teaching BTMM now. For your candle to close above the 13 EMA, then you can actually trade it. Or you look for shift, right? Right, is it shift now? I've actually forgotten the name they do call that, right? Right. But when the market actually shifts away, you can actually the shift candle, right? The shift candle. You look for that shift candle, then you actually trade that. Okay, let's go to lower time frame and see. You know, you have counted your three levels of drop. That is when you now be looking at, looking for your entry. Let's go. I hope my chart will be able to go as low as this month. If not, then it's fine. Okay, it will not get there, right? So it will not get there because it's limited to 10,000 candles that this can actually view. So it might not be able to get to April that happened, right? So it be double bottom? Yes, double bottom, double top is still W, right? But based on what I explained, I believe that you guys would have actually understand what I'm trying to say in here. You guys would have actually understand that you should get that already. Where is this on? April. You guys should get that already, right? You guys should get that already. Probably I will just look for a recent one. Or that's actually the first one. You look for the nameable pattern for you to actually get this zone. Okay, let's look for another three levels of rise for you to now look to sell. Right. So let's look for another three levels, and I believe with this you should be able to transfer the knowledge to whatever time frame, or just leave space for for question. Now, these particular three levels of rise actually happen it may, but let me go down to that zone. Right. This is actually another order block here, another bearish order block. That this is before you mark your order block, you would have actually counted your three levels of rise or three levels of drop. Then you now look at the higher time frame if it is actually at the higher time frame for you to trade that. Now, let's go back to the 1 hour. Let's go back to the 1 hour. Right. You can see that when we counted three levels, the level one, right, consolidation, level two, consolidation, level three, when it actually hit this particular order block, right, this actually daily order block, that is when you'll be looking at selling this market again. But you can see this also give us three levels of drop before this reversal up. Can you see? So with this, you would have actually catch how many pips? Probably if you actually enter using um, um, or the peak trade, you would have actually and you would have actually gotten 94 pips. Let me hide this video. Right, you would have actually gotten 94 pips from there. Even from the level one stop on, you would have actually gotten what about 90 pips or whatsoever. Your target, I know your target would have actually met with just this alone. And with this alone, when if you enter from peak trading, right, this should actually give you more than 200 or probably you can say 200 pips. Actually, it actually gave 200 pips. Can you see that? So this is actually how to trade BTMM and ICT, counting using order blocks as a support and resistance. Then you are not just entering any trade as expected. You are just looking for the best opportunity for you to trade using the order blocks. Let me just use the recent, probably if I can get any recent one so that I can use a normal thing. Okay, look at this. Look at this. So I will use this one as probably for entries, and you actually see entries. Now, look at this level one, right? This is level one, this is level two, and this is level three. Now, let's go to daily and see the other block that actually got it retested. Uh, okay, I think these three levels. So let me check that again. I'm sorry, just want to trace that for easy tracing. Right, this particular area here. Okay, this actually broke the other block. So this would have actually be the best other block for you to check this particular area here. But let's see this particular area. This is actually the other block here. Can you see that? That's actually the other block. So let's go to the 1 hour time frame again. Then we'll go to the M15 for us to find the entry. Now you can see that when the market actually traded into this area, so it's something that you can see trade. How you counted your level one, right? Your level one, your level one, your level two, and your level three. So in this particular instance, that's really where you'll be looking to take your trade from. So let's go to M15 and see how you would have actually taken your trade. Right. So you'll be looking for the pattern there, M15. Right, M15. What are you looking for? This pattern, something like this, right, or something like this for you to take that trade. But let me use. Let me just install indicator. Man, and let me change the color. Probably to black. So you should know that the 13 EMA is actually according to BTMM. Now, how do you want to trade this? You know, you are to trade the first. This is actually going to form the first leg of the W, right? So this is actually what we call the multi-day W or the multi-section W, right? The first leg of the W, and this is actually the second leg, right? The second leg of the W. You know, your stop loss will be below the second leg, right? Or majorly below this area, right? Right. But if you know my entry, my kind of entry, this would have actually saved you from so many stop loss in case of these EMAs. Because as you can see, the first one actually closed above the 13 EMA, and you would have actually said that, oh, this is actually this thing. But another way to actually trade it, another way to look at that is that for you to trade the second leg of the W in this particular pattern, you go to the H1, right? Then you mark the other block there, right? This is actually the last order block in that particular zone. So when you see the first leg on this particular zone, you are just waiting for market to come back and actually retest this particular order block again. Are you with me? You are just look for market to come back to retest this order block again. So with this, when market come into this zone, you can enter at this order block. You can just put your pending order here and your stop loss below this area, or you wait for market to give you something like this on this particular um on this particular order newly order block that you marked, this particular one. Let me just change the color so that you can see that. Let me change it to black also so they can actually start. So when market come into this zone, right? When market come into this zone, then you'll be looking for that pattern. So where is that pattern? This is actually this kind of pattern there. So you'll be looking to enter at this particular area. Where is the stop loss? Your stop loss is below this area. Then you would have actually catch this whole move here. Can you see that? You will actually catch this whole move. So that's actually what I'm going to share with you. Listen to these recordings again over and over again. Then you can apply it, back test what I just discussed with you. Then you are going to see uh, the effectiveness, the effectiveness in that. I hope I'm communicating, and I hope you've actually learned so much um, from this, how to trade 3 levels of rice. And I'll actually teach you entries too. So these are actually the kind of entries you can look out for. This is actually one of the way I take my entries. So you can actually master what I just discussed with you. On another block, you look for this pattern. Let me go back to that zone again. You look for this pattern. So when you find LSB, so your LSB will be when market structure is broken like this. You know, you can actually um, wait for the retest of this one again. This is just you limiting your stop loss, right? This is just you limiting your stop loss. Now, when the breaker happened, I can actually see that this was a candle that actually broke this particular order block that created this liquidity grab or this low to be taken. When you've loaded that, you wait for market to come back to retest that order block again, right? So your entry is actually on this order block, and your stop loss actually below this area, about 25 pips stop loss. About 25 pips stop loss. If you go for 1 to 6, that is about 150, right? And with 150, that's a 1 to 6 risk reward ratio. Your entry is here, 25 pips, 150. You would have actually banked, take your profit here. But on your way going, you would have actually taken some profit. This is actually 1 to 3. Can you see 1 to 3 is met here? Then 1 to 6 is met here. So, nevertheless, there are some other entries you can actually take. Taking it from um, what's it called now? Safety trade, right? Safety trade will be after the 50, 13 and the 50 cross. After the 13 and the 50 cross, you are looking for the entries. Let me just add the 50, um, but you don't need that actually because I've actually taught you consolidation. Um, that's 50. Let me use another color, probably yellow. You can use your own color as the case may be. When they cross here, right? When they cross, you can look for another types of entry that you actually looking for, and you know you can say that okay, the peak here is locked after the 13 and the 50 cross, so you can look out for the entries in this particular zone or as the market is actually going. This actually did not give us any stop point for us to take this trade. So the best is actually taking this peak. You know, this is actually peak trading, taking this peak here, and you can actually see how I actually take my peak. So this is actually the best way to trade pick. This is not guessing again, right? This is not guessing. This is not gambling. Just like what I said, that many people that actually trade BTMM peak, they are gamblers because you cannot determine peak, or else you're actually using this method I actually teach you to identify level three and to actually identify when the market and where the market is likely to reverse from. So with this, you have upper edge than anybody trading BTMM, right? I don't trade BTMM because I found a system that's actually better than that, right? You can actually know exactly where the market will reverse. You're not just guessing with indicators. All right. So that said, you can study these recordings again. I think I've actually explained so much for you to know what I'm actually talking about. So thank you for joining in. You can ask your question now if you actually have a question. Let me just give the opportunity. I hope people will not abuse that again. Let me just give the opportunity for people to mute themselves and actually ask questions. If I see that uh, you're actually taking advantage of that to disrupt my class, I will just block everybody again and you just send your question. Right. You can unmute yourself now if you actually have a question, then I can as well answer that.
Hello.
Yeah, I'm here.
Hello, can you hear me?
I can hear you.
Thank you for your lecture. Thank you for your lecture. Very interesting.
Yeah.
And my question is that on this analysis you did, actually me, I'm addicted with trading boom and crash. So I can use this analysis on boom and crash also.
Yeah, go and back test it. I don't trade boom and cash. I don't even trade in volatility basic again because with
Okay.
money there, I actually see some kind of manipulation with what we are doing. I actually have huge amount of money there, so I don't trade it again. If I ever actually want to trade it, I'll
Okay.
trade it with a small amount of capital. But for now, I just suspend my trading with them.
Okay. Thank you so much.
Yeah. So you can backtest, just practice backtest, then you can actually see if it works.
Okay.
But for me, I don't know why people are actually running after that boom and cash and whatever volatility. Why not trade it forex? People say, oh,
Okay.
there is you can catch quick money there. It's because people don't know what they are doing in forex. That's actually why they are not making anything in forex. Forex can give you more money and it's actually more reliable than that because there's only one broker that's actually offering that. And I just like what I said, I can see manipulations in what they are doing. They've manipulated my money. I've actually
Okay.
seen those things, and that's why the reason why I stopped. I don't really encourage that. When people are trading that, I've seen some people that said, "Oh, they are not trading FX again because they see people making posting money that they have actually made on those things." And I have one of my French student that actually blew his account because of volatility pair. Instead of
Wow.
trading volatility pair, and he just jump into that without knowing what is actually going on. They open his position. They open positions behind her, and what happened? All the money was gone. He was not trading. He just took the money and he opened positions, and all the money was lost. And that's actually the same thing he did with me. So
Okay.
I don't actually encourage people to actually do that.
I'm trading forex. I'm only trading only one currency, one pair. That's Euro USD.
It's okay. It's okay. It's that if you can actually stick with that, what thing you just need
Yes.
to do is that okay, we are trading one pair. Instead of you risking
Yes.
1%, you are risking 2 or 3%, right? So you just look for your
Yes.
pattern and you just trade. With just trading one pair
Yeah.
alone, you can actually make your target within a month. So it's not a problem.
Yes.
Even that will actually
Yeah.
keep the focus for you, right?
Yes. Yeah.
Right.
Thank you so much.
Yeah, you're welcome. Right. So any other
Uh,
question? Can you do a recap on daily time frame? You can see the recordings again to see what I've explained. So any other question? Any other question? So you just study this and practice that.
Can you
All right.
uh, can you hear me?
I can hear you, please.
I'm the guy who did the analysis on USD CAD. Can you give me your opinion?
I'm not doing analysis on any pair. I am just teaching what I actually want to teach.
Ah, okay, okay,
Yeah. I'm not doing
okay
setup
then. Thanks.
analysis. Yeah.
Okay, okay.
I'm focused. If I say this is actually what I want to do, I don't want you guys to go outside what I'm actually doing here. I'm not doing setup analysis. I never said that's actually what I'm doing. Can this be used with any pairs or just FX? It can be used on anything, right? It can be used on anything, but majorly FS pairs, really. Euros and GBP pairs. It can actually be used on any pairs, any instrument, indices or Swiverton's volatility. It can be used there, right? Because basically, it's actually trading order blocks, right? Another thing is that actually, another thing I actually plan to discuss with you is, okay, for example, let me go to that USD card now. Let me just go to USD card. For example, you go to probably daily time frame. When you get to daily time frame, and you just mark another block, right? When you mark another block, probably let's say, for example, I'm not sure my indicator. Uh, you mark this kind of order block, right? You mark this zone as another block, then you actually want price to trade into this zone. So even without you, this is actually daily order block. Even without you switching, counting levels, you just want price to just trade into this order block. And when price gets into this order block, then you look for entries. Let me say M30 or H1. Let me just say H1. September, do not get to that zone. All right. When market gets to this zone, I think I should change this color. It's not looking nice. Probably red. Let me use my normal red. When market gets to the H1 order block, right? So you just look for entries. This is actually for people that don't have time, right? You just look for your entries on H1. When market hits this order block, you just look for your entries and you enter. So nameable pattern will be looking for M's and W's in this particular zone. So this can actually be it, right? At this particular zone here, this is actually an M for you to trade it, and this is actually another one. Can you see this one? But you will have actually lost this trade before this market came back. You can see traded all the way down here before it came back to this zone and retested it again. So retesting it is actually giving you like multi-day M's and W. So with this, you can as well trade this pair down. Can you see that? So this is just you trading. You're not counting any levels. You're not counting anything. This is just you looking for higher time frame order blocks. Then you're waiting for market to just hit it on a lower time frame, be it M15 or M30 or H1. Then you look for your pattern there and you actually trade that. That alone will actually give you so much money. Just trading order blocks alone. Then for each, probably the best one is actually to combine H4 and M15 or daily and M15, right? You look for other blocks. Then when you get to that other blocks, so for example, look at this actually daily. This is another block, right? Can you see that? That's actually another block. Then if you go to M15, then you look for pattern, right? M's or W at that particular place. I'm sure it's going to get there. Sorry, let me just let me use H4. Let me just use H4 as an example. I think I use H4, right? So this one here, right? Then you go to M15. You wait for the retest of other block. That's actually what you want to look to trade. You can see how market actually came. Then what are you looking for? You're just looking for W pattern on this zone. When market comes to this particular area, you are looking to trade it when market come out. Can you see how it actually came and retested 2 times? So you'll be looking for your entries to actually trade this pair up. So you're just trading other blocks and the likes. Let me use GBP Euro USD now. Let's go to 84. We are just trading with other blocks. What can I use? This is actually another block. This is another block here. Right? Can you see how market actually really back into this? So with this, you go to H1 M15, right? With M15, this is actually it. Can you see when it broke the other block, the market came back? Look at the pattern that market gave to you. Can you see that here? So when you trade is actually when you have LSB. So when you have this LSB market structure broken, you can enter it immediately, or you enter when market actually came to retest this zone, then you sell it down. With this, you can actually give yourself targets. Right. So that's actually how to go about with that. Can you see the retest and you actually drop? These are the best way of actually trading without you having knowledge of whatsoever combination trading I'm trading. So even though when I have setup sent to the page, you can as well just look into your setup and see, to the setup and see how market actually reacted to that zone. Then you actually trade it. I hope that is clear. And I hope I'm actually giving you enough materials for you guys to eat. These actually things that you guys can actually practice. You can see this actually another block. See how market came back to retest it. These are other blocks. Look at how market came back to retest it. So you are just looking for a best opportunity for you to trade, looking for how markets react. So what I just said is look for H4 or daily, then wait for market to actually retest two zones and wait for patterns around that zone, M's or W, right? Or something like a mitigation block there, then you trade that up. All right, guys. To you later. To you later. We are going to see again. So if you have any question, just send it to the chat. I'm always available 24/7. It's actually not normal of anybody like that, but I'm always available. You can send me your message um, on my mail, right? You can message me. All right, you can message me on Telegram at online trader 16, right? At online trader 16, right? That's actually my Telegram username, right? Or you can actually contact me on this mail. That's actually for people that are not on here, so you can contact me here, and you can also apply for the mentorship class, which is actually 350. I think we announced that the class will start by April 1st, but I'm actually starting it by April 30th, right? 30th of April, of March, right? This month, that's actually 6 days to come. That's when I'll be starting the class. For those people that have registered, then they were going to learn my own system of trading, right? My concept name is actually liquidity provider concept. We trade majorly liquidity zones and how those liquidities were taken out. Who predict liquidities before they happen, and how you can actually write that. All right, guys. Thank you. What is King Gobi? You know King Gobi when you join the class. Um, Thank you so much. I'll see you some other time. Bye. Take care. I'll see you later.